Hey everybody, JD here with another edition of Five Questions with Louis Navellier. It is Friday, February 6th, and Louis, the market, if you were a time traveler and just dropped in to the markets today, you'd think, hey, everything's fantastical. But boy, the intraday and intra-week volatility is just crazy.
Yeah, I think as we look back on this week, we can conclude the tail wag the dog. All those people that bought the leveraged silver ETFs and options learn that that can bite them. Okay,
Mhm.
because they lost over 30% in a day, and we're still dealing with the backwash of that. Obviously, gold had some similar products, but gold is just got a lot more buying pressure, and
Well,
so
Louis, my first question for this week then is tied to volatility. I know one of the I guess factors for your model is high alpha, low beta, and I'm assuming low beta is a great way to hide out when things are volatile.
yeah, it is, and it doesn't fully protect you. What it is if the market corrects 5%, it'll protect you. If the market corrects 15%, it won't, because it gets to the point where they start to throw the baby out with the bathwater.
True, true.
But then when the market recovers, the good stocks like I own with good sales and earnings bounce right back, and the bad stocks bounce like rocks.
Yeah, and that actually leads into my second question, Louis, for the week, which, as a portfolio management geek, I've said this to you before, but your ability to zig when others are zagging, I think is the terminology you utilize. Explain for folks that may not be familiar with you how you're doing that, in particular in this market structure, and I guess.
Sure, sure. So when we build an optimized portfolio, mathematically trying to get the highest alpha, which is return independent of the market, the lowest beta, and the lowest standard deviation. Uh, and if they're really geeky, it's the lowest residual variance, but it's just volatility. So the way the computers think, stocks are squiggly lines, and it tries to combine the stocks to make a smooth line. Okay, and then you can take the optimization model, and because to make a smooth line, it's going to weight the stocks differently. And then you can take that optimization model and you can go farther out on something called the Fisher Frontier and get a higher return, but then it gets a little bumpier. So I usually optimize at something called a tangent, which is where I get the highest return, least amount of risk. It's kind of like finding the sweet spot on a yield curve where it's bending.
Okay.
And the computer comes back and says put 3.27% in this stock and 1.43 in this stock, etc. So every week we run these optimization models. Now, do we follow them every week? No, because we have a lot of taxable money and it's not tax efficient to do that. But as new money comes in, we follow the allocation models.
Yeah, it's in this particular market, I know one sector doing very well for you when things are rough is the gold mining stocks.
Yeah, yeah. They're
And I
rocking today.
know,
Yeah.
the leverage stuff for a day or two negatively impacted gold, but taking a step back, what are your views on gold? I don't see any changes.
Well, I just went on Fox Business and called for 10,000
Did
by the
you?
decade, and I wrote an article on it. I don't know if it's been posted, but I did write an article for a major publication that's saying the same thing.
Wow, that's a bold
Well,
prognostication.
it's not really bold because the alternatives are so poor. So you can put your money in the Chinese yuan, earn no interest, have a hard time getting your money out, and wait for them to devalue the currency because that's what's going to happen. You can invest in Japan, earn next to nothing, as the bond vigilantes pray in that country and watch the Japanese yen erode. You can go over to Britain, buy the British pound. The bond vigilantes are all over them because Kursteimer chased the rich people out of the country, and now they got to raise taxes on the middle class because they can't pay the government debt, the interest on the debt. So the British pounds are going to erode. Or you go to some place like France, who's just fell below their birth rates fell below their the deaths, so they're losing households now. And of course, France can't do a budget. Marine Le Pen controls parliament, and and she can't work with Macron's prime minister. So the EU the whole EU has a demographic problem, except for Spain and Portugal, because they got a lot of net immigration. But the rest of Europe is just dying. So the probably have to slash the value of the euro even more by cutting rates. And so your only places to put your money are the US dollar, which has strong GDP growth. We do have a deficit, but we can service the debt. And we can always grow through immigration. And obviously Trump wants the legal kind. And and then uh and anyway, so your choice of the dollar or gold. And there's
Well,
a
there's
lot
another choice in there, Louis, and that's my third question for the week, of course, and that is a topic I hesitate to dive into, but it's Bitcoin, and I spent 90 minutes. 90 minutes I'm not going to get back listening to the MicroStrategy conference call last night, and I tell you. It really reminded me of Enron. So I want you to go back with me in time a little bit, if you can. What were your views on Enron
Well,
when
what Enron did wrong, I mean, they were a legitimate energy company, but they
well, time out, time out. So you said something important that I just want to throw out. MicroStrategy is also or was, and I'm not even sure exactly what their operational underlying business was, but they too have a legit business,
yeah,
and
yeah,
they've become something entirely different.
but they were buying Bitcoin, which was eroding their corporate assets, and so the stock deserved to crash and burn. And of course, it's bouncing today because Bitcoin's back up. But Enron, what got weird about Enron is they wanted to become a broadband provider and put internet on all the fiber optics and all their pipelines. And I just thought that was a weird one. Okay.
Hmm.
And they had legitimate business and assets that was sold off. Okay. But the way they did their accounting was not kosher. And that's that. But when they decide to go down it's like Exxon saying, I'm going to get into organic farming, or I'm going to do something that they don't normally do. You know what I mean?
Right, right.
Also, they like, what's wrong with the energy business? Can't you do what you know what to do? And
Yeah.
here's Enron coming out. Enron was booming when there was a firm called Calpine, natural gas peaker turbines that would come on during peak load demand.
Yep.
Uh, Calpine was actually based in San Jose, California. California used to have predominantly natural gas peaker power plants. And Enron was, affiliated with all the growing share of natural gas in the country and facilitating that transportation of gas. But when they wanted to do broadband, we're like, huh? Why are you doing that? Oh, we'll just stick it on the fiber optic on our natural gas pipelines. Well, they don't go to all the right places, so that didn't make sense to me either. So it's not easy to do what they were bragging about. And then of course they didn't do their accounting properly, which is why their CFO went to jail. And then the head guy didn't go to jail because he died.
Yeah, it's a fascinating they were very smart people, and I have to say the strategy folks are super impressive. The alchemy and financial engineering that they're deploying, um, it still relies on there being an underlying value to quote unquote Bitcoin, which I question, but they've come up with some things, and they're making themselves look more and more like a bank, issuing this preferred stock. I don't know if
Sure,
you've seen that
sure.
tax deferred paying an 11%, tax equivalent yield close to 20%, and with low
Yeah.
vol.
Yeah, I have a friend who has ETFs that do that, and I'd rather you interview them and they can explain how they're using crypto to get a ridiculously high yield. And all I can tell you is that I'm not doing that.
It
Okay.
seems it seems very suspicious. That's why I bring
Well,
it up.
the problem is Wall Street likes to get high yields with leveraged debt. And obviously now it's mostly private credit paying 11%. And I would be more comfortable doing that than leveraging crypto. Okay.
Yeah.
Even if they can write a call and collect a premium and all that stuff. And I do want to remind everybody, I wrote a white paper back in 2008 because when we had the financial crisis down in Palm Beach, we obviously had Bernie Madoff and all that news. But the biggest disaster were the leveraged muni products. And they were leveraged at least 6 to 1 in munis. And the AIG credit default swap allowed them to do the leverage. But when the credit default swap failed, they were forced to unwind the leverage all at once. So they had what is called a black swan event where they all went to sell, they dropped the bid, and they lost 97% of their money.
Oh, wow.
A-rated munis they were selling back then are still good to this day. But what happened is when the leverage came unwound, they were forced to sell immediately. So anytime you're forced to sell during a black swan event in the credit markets or a flash crash in the stock markets, and you could argue this week we had a mini flash crash, you are going to get fleeced. And then you
You
go,
know,
wait, and say, why am I 50? Why? Oh, I just lost 15%, from
I
Wednesday
tell
to
you,
today.
I think you'll appreciate this. Listening to that conference call, it had me thinking about a lot of the changes in our world. Even professional money managers these days, I don't think folks do the work anymore. And if you
No,
had listened to that conference
AI
call
does
last
financial
night,
analysis now. That was the what was it? Anthropology, their new but does
Claude,
anyway, it does financial analysis, whatever that means.
well, yeah, all I'm trying to say is that you know, I didn't execute on this, but there was an opportunity because I'm not managing money. But after listening to that call, I mean, I could have told you last night that Bitcoin was going to be on fire, but even more importantly, quantum computing stocks were going to rally today, given the amount of time the CEO and their CFO spent on discussing the risk to their business from quantum computing. And the fact that they spent so much time on it, Louis, you know, to me, I don't know, I may be different, but the fact that they spent so much time on it tells me that quantum computing is very legit. They're
No,
fresh
quantum
to
computing is
death.
legit, but they're using that as an excuse if they screw up because quantum computing doesn't really exist yet. It's ones and you use a one and a zero. IO and Q figured out how to package the data in quid bits for programming. NVIDIA had a programming contest that D-Wave won, which is, it's just like, do you want to use Fortran or C? Anyway, D-Wave won that contest. Rigetti says they can encrypt the quantum stuff better than other people. I'm in Reno here. I have a friend that has the Air Force contracts to encrypt all the commands going to the Air Force through the cloud. And so, when the cloud switches from, using a one or a zero in regular computing to a one and a zero quantum computing, Rigetti's trying to steal his business. Okay. But it doesn't exist yet. Okay. NVIDIA has a quantum cloud simulator. It just doesn't exist yet. They're not using ones and zeros.
Yeah, I
Okay.
mean, and strategy was talking about the risk being 10 years down the road. I just thought it was interesting
Well,
because
they're trying to find a scapegoat so they can blame
yeah,
things.
that's a another
But that
important.
kinky income that they're talking about, great. But is it liquid all the time? And that's what I would worry about because markets aren't liquid all the time.
Yeah.
The stock market's not liquid all the time, but we saw that this week. It's liquid today. But you could argue on Wednesday and Thursday it wasn't. Okay.
Yeah, it was very
Um,
dislocated this
and
week.
credit markets aren't liquid all the time. So, the problem is when you do these things, you don't want it to come unwound or in a forced sale. And of course, all the kinky people on Wall Street do derivatives. Okay.
Yeah, yeah.
And, more than half the derivatives are French because the NC Business School teaches everybody how to do a derivative.
Hmm.
And so this is one of the problems the French have. They're so busy doing derivatives, they don't realize that Nvidia is now worth more than their entire stock market. Okay. So, are you smart everybody or not? I mean, I'm not so sure. Okay.
Yeah, I would question that as well. Hey,
But
Louis,
they do it to create the illusion of liquidity and they hide behind big corporations. So
sure.
if something goes wrong, they can just go get a new identity.
Um, Fourth question this week. GDP now continues to be very strong. Are there any changes to your 2026 forecast?
I haven't seen the latest update. What's the latest update?
It was over 5%. I don't have the exact number.
Oh, excellent.
And it was
Excellent.
still fourth quarter, but
Excellent.
and then, obviously the fourth
Maybe it
quarter
was
is
ISM
long in the
manufacturing or some other stuff. Okay, that was excellent.
yeah, it's really
It
strong.
was four,
So,
it was 4.2 after the latest trade data.
yeah. Um,
Well, that's wonderful.
your forecast for 2026, remind everybody, was for 5%, correct?
Yeah, I was forecasting we'd hit 5% GDP growth this year. Now I'm thinking we'll briefly touch six. But we have to fix the housing market because the housing market is a drag on GDP. Most of the gains are coming from trade.
I can't wait to see what the new chair of the Federal Reserve is going to do with policy. And, I think what gets, less focus is not, everyone's talking about interest rates. I don't care about that. They talk about the balance sheet too. What I'm curious about is again, modern day solutions. And I think that's what
Like
he
I said,
brings to the table.
Kevin Walsh is, we talked about this with Ed Yardeni on Nebler Market Buzz. It'll be up on Sunday. But Kevin Walsh is a very vocal critic of the Fed, especially quantitative easing. He doesn't like quantitative easing. So the
Yeah.
Fed should be shrinking under Kevin Walsh. So that's my
Yeah.
comment.
Okay. Louis, let's wrap it up because I got to keep it short this week, and I apologize. I wish I could chat
Yep.
forever with you, but I'll just blank slate it. Uh, any stocks in particular sectors that you're liking that we can leave people with?
Well, in the wake of what Supermicro did, I think Vertiv VRT is going to have a blowout quarter. So they announced next week.
Okay, VRT is the ticker symbol.
Yeah, Vertiv. Yeah.
Yeah, I looked at it yesterday and I wanted to put it on my watch list, and of course, it's up almost 10% today.
Yeah, and Nvidia is also going to have a blowout quarter too, and that's I think on February 25th.
Well, and we should mention Palantir, Louis, which I love. Their numbers were so strong,
Yeah,
and the stock, it did on a down day in the market, the stock did really well, but then got attacked. I can't figure out why. The numbers are so good,
because there was a narrative that AI is
right?
going to
The
eliminate all the
software
software
narrative.
companies. Yeah,
Yeah,
that was a false narrative. Yeah,
I
you
agree.
got to remember the market is a crowd, and crowds are not smart.
Okay, good final words. Let's leave it at that. This is JD for Fireside Trader. Thank you, Louis Navellier, and the 5 questions with Louis Navellier. Another great segment, everybody. Take care. Have a great weekend, and we'll see you all next week. Thanks, everybody.